to the January 2023 market report. You'll note that we are pre-recording this now rather than doing it live. We hope that you'll get the same kind of value out of it, and we appreciate the opportunity to provide the statistics of the real estate board to you by this method. You'll note in our first slide the number of residential listings that are listings comparing to December of last year till this month are up. But if you look back into January, where we started the year in 2022, those numbers are very close to being exactly the same thing. We're slightly above that, about 8.9% above that, and that bodes well actually for the year. We're not while we're getting more listings, it's not necessarily a trend. We've seen a drop in the listings that we've seen throughout this slide throughout the year, and we're happy to see that to start the year with listings that are a little bit more toward the average. On our total number of current available listings that we talk about, that we call it inventory for the most part, you'll notice that we have 977 listings available at the end of January. Compared to 975 at the end of December, which is basically even. You'll note, however, when you go back to a year ago, and we can show you that we only had 340 listings available to start the year, which was basically one of the reasons why you saw such a price increase in that a dramatic price increase in the first 3 months of the year, because you really started out with very, very few listings. That is not the case this year. We don't expect to see any upward pressure to price as a result of this graph here, because we're starting the year with a reasonably good amount of listings, and we don't see that'll provide choice for a lot of people. Will also affect our days on market to some degree. We see that the number of sales, the residential sales that have occurred, are slightly above December of last year, 230 last December, and now it's 271 for the month of January, and that bodes well. If you look back to January, to the 12-month review, look at the sales in January last year as compared to the sales this year. I would call this year much more normal. It's more normalized than we saw back in January. January last year, the whole it was really because of the interest rates being very low. You had a lot of demand in the marketplace. People were scrambling to find houses, and they were buying them at a rapid rate. And you'll see that, you see the first 3 months that really went to a high extreme, and then really started to taper off after that because of consequence. The consequence was really the interest rates. You can basically map out that whole drop based on 8 incremental increases in the interest rates over the last year. Average days of market, you'll notice that's still hovering around that month. Roughly, 30 to 34 days is what we're experiencing on market. That hasn't changed, nor do we expect it to change too much. And one of the reasons for that is because if you saw that first slide or the second slide where the inventory was well into 900 houses, that gives people an opportunity to pick and choose and see more houses. It's going to take more time to sell a house as a result of it. And that is quite what we're seeing, and that's quite normal for our marketplace, not unusual at all. Monthly percentages, let's keep in mind with this graph that we're comparing to last year, where the first 3 months of the year, remember the graph where we saw just a huge spike in the sales of houses in that period of time. Well, you're going to see percentages based on that, and they were certainly going to be well below those percentages for sure. You'll see this graph normalizing probably around April, when you started seeing some drops in the sales of homes last year. And when you compare one year to the other, we'll get closer to being a much more reasonable number. Expect this number to be, continue to be in that 40 to 50 bracket, because we're certainly not selling that level of houses because the market was pretty hyper at the beginning of last year. Okay, houses sold above and below the 550 mark. The trend that has been that the lower market, the under 550 market, has always been the bigger part of the market. We continue to see that trend. Started in August, and that's where it's been ever since, even though it's lesser numbers. Notice that the numbers of the houses being sold in those markets are about the same. So we see January at 187 sales compared to December last year at 188. Let's go all the way back to January of 2022, and we're hovering around the 208 mark. So we're not starting the year off at much less than what we started the last year off at. That's a good sign. That's a good sign that those are roughly where the numbers would have started the year off, and in that market. The market basically, we can't understate this enough. The market in the under 550 has been pretty steady. And you can see that all the way through the year, it's been a market that really hasn't changed substantially or dramatically, unlike the homes sold above 550. And so if you look at the 550, the homes sold above 550, we're now at 84. We started last year at 243. Huge difference in the market between this year and last year, and those prices above 550. And what's really important too is that if we dissect the number of the 84 homes, that you'll notice that there was only 9 houses that sold in the prices that were over $1 million, and so everybody's sitting back on that. There's a reason for that. We have to spend a little bit of time discussing that. The reason is that it's become much more complex in the decision to buy another house. Usually, this is what we call an equity trade. I have to sell my house to buy another house. Yeah, and I'm either going up or I'm going down, and the difficulty is that the price has not been the same. So I've got to work on that as to what am I going to get for my house at the end of the day, because it might take me 3 months to sell my house. So what am I going to be looking at? And also because of the interest rates. So if that includes a mortgage, I have to have that in consideration, plus the sale of my house. Makes it much more difficult for me to make that decision, and a lot of people are retreating to the sidelines because of it, and that's really why we're seeing a weakening of that upper market for sure. Average sale price, you notice that the big drop off at the beginning of the year, and that's only because it's now a 1 month average. So you see the graph in the upper and the lower being the same. It's $516,000, but it's really important that you notice one little thing. On the bottom graph, you'll notice that the monthly rate last December was $473,642, and so that has gone up for the first time. So we've seen that dropping. The monthly rate has been a gradual drop, other than the little uptick in October, but we've now dropped to a low in December, and now we're kicking back up to a little over $500,000, and that's an interesting thing. What does that mean? Well, it could mean, it may not be, because we don't have a 3-month trend, but it could mean the bottom of the market has been hit in terms of what our houses are going to drop down to, and that should be something that we should take notice of. Year to date sales listings ratios. This has really been a situation where it's basically stayed the same since June right into July of last year, and it really remains that. It's not unusual for our sales list ratio to drop in January, or actually in December, but you'll notice that we've had a bit of a drop there. Still a balanced market between 40 and 60% of the sales, so it's on the low side of that. Could go into a buyer's market, but we'll have to see whether the trends continues to go down. You'll notice that on the monthly rates, it actually kicked up in December of last year, and then back down to 40% again in January of this year. But look at the beginning of the year. In both graphs, you were in the 75s and 80s, 76%, 82% in both of those graphs. So you really had a huge market going on at the beginning of last year, and that is not where we're at this point in time. Again, our popular sales of the houses for January basically following the same trend. The ranches are the highest selling house by style, and that's followed closely by a raised ranch, which is a very popular home that is being bought here, and a two-story at 526. So it's always nice to review these things because it's done by property type as opposed to by area or by the entire over area that we have. But it's a good little graph. We're now including our condominium sales. We're going to continue to follow this, and you'll notice that the condominium sales does not mimic the house sales, and that's really important for us to know that they're really a group unto itself. At the end of last year, by the way, condominium sales in terms of their value actually increased in price. They had a 16% increase, so slightly over $400,000 for the year of 2022. It did not follow the same trend as residential sales would drop by a considerable margin. But look at the strength in the market there. In January, 49 sales in the condominium market compared to 28 in December. A big uptick, and it's roughly, if you compare it to January of last year, it's even over that, and that's a good sign. So it means that people, first-time buyers, are going to that market and seeking condominiums as an alternative to pricing, and pricing that is slightly higher still at this point. So condominiums will continue to be a strong market, we think, into the coming year. That's basically our market report. We thank you very much for joining in and viewing it. We hope that you'll find the information valuable to yourself in whatever decisions you're making, and we appreciate taking the time. Thank you.